happy we broke the wedge day, guys. I had to turn my camera on for this one because if you've been watching this channel for a while, you know how painful this wedge was to me on the daily time frame, and we have finally broken it. So we're going to talk about that. We're going to talk about what is going on now. We smashed through the 28,100 1-month high-level liquidation target. We've also then smashed through a couple of others. So we need to do a full reset today, have a look where the new liquidity is, what the market maker is likely to come for next, and where we go from here. So if you're new here, welcome. If you're returning, welcome back. It is a great day in crypto, that is for sure. But we don't want to get too carried away. We always just trade what we see, and that's what I'm going to start with in this video. So whilst I get into the alpha, make sure that you hit that like button, hit subscribe, and turn that bell notification to all so that you can be notified every time I upload a new video. Now let's talk about this daily time frame. One thing I really like to do before I actually get into smaller time frames, being a day trader, as you guys know on this channel, is I always like to get a macro view of where I am in the higher time frame cycle, especially after we've had a significant move. So this is me doing my whole charting process from scratch after a big move so that it helps me calm down and not feel like, you know, I may have missed out, or should I be taking profits, or it just helps me get rid of all that emotion and go, okay, I know where I am in the cycle. I have a plan, I build my plan, and then I just trade my plan. So let's do the plan together. Number one, we know that we trade a typical pattern here, which starts with a W formation. We have the breakout of the W, which causes rise level 1. From there, we expect a retracement, or as we call it on this channel, a board meeting. Now, I had a comment actually made me laugh the other day. Someone left a comment on my YouTube saying, what the hell is a board meeting? So if you're new here, I just have to introduce you to my new language. I very rarely talk about trading in a typical manner. So people use the terms triangle, wedges, trend line. I don't use any of that on this channel. I literally make up my own language. And board meeting is simply a period of consolidation where price just goes sideways. So that is one of my invented terms. My community, the TTC tribe, shout out to you guys if you're watching today. We fought hard for this trade, but they renamed it board, B-O-R-E-D, because it's boring. So whichever way you want to take it, it's a very important part of price action, and essentially we call it a board meeting. So after you have a level complete, you expect either a retracement or a board meeting. In this case, we got the retracement. We've had the level 2 rise on the daily time frame, and then we've had this retracement as well, which brought us back to the 200 EMA, and that's where we've been waiting. We've been waiting throughout the bottom of this entire wedge, trying to snipe our W formations on the lower time frame down here to really get that excellent position for eventually the breakout to the upside. Now, we knew there was a high level of liquidation at 24,600. That was where we thought if we came down to there, it would still be okay. This whole formation would still be in play. We just missed it, also totally fine. Now, what we have going on here is, besides this following our particular method that we trade here on this channel rather perfectly at this point in time, it's also following Elliott waves. So what I want to do now is I want to have a look at some Elliott wave targets, because being someone who only trades liquidity and who only trades like the market makers, it's to my advantage to understand how people who trade retail patterns will be thinking. And if I can line their potential targets up with my own potential targets according to this method, it strengthens where I eventually want to take profit on my trade. So what we're going to do here is mark out the levels for the Elliott wave. And first of all, what's important is we have to make sure that rise 3 here is the longest wave at this point in time, because wave 3 can't be the shortest one. So we're going to take the fib tool and measure out wave 1 to the wave 2 retracement, and we can see here that price did go above 100%. So currently wave 3 is higher than wave 1. We are good there at this point in time. And then this retracement here remained above these candle closes here. So it's all correct. That means that we can now do the same trend tool for this retracement to this high here, back to this retracement, which let me just remove some drawings. And now when we look up at these targets, we can see here we've got 61.8, 78.6 and 100, and also the 127. They all line up with my areas of interest based on this method that we trade here. Now, these targets that I have marked out, the first one is between 31,770 to 34,289. Now, yes, that is a big range. If price happens to get back into that range, we will be able to tighten those targets. We just can't do it just yet. But that is based off unrecovered vector candles on the daily time frame. So if we go and have a look here, this is the unrecovered vector candle that price has not returned to yet. It's come back to this portion. So this has all been rebalanced here, and we also did return to it on most of it here. So what we're concerned about is the part that is still left unrecovered, and that is between those numbers that I just mentioned. If we can break that, which, big reminder, I'm not saying we're going to 40K, I'm saying we have conditions to meet, and this is the first battle zone. If we're successful in breaking that, then the next one is 35,570 to 39,943. So just under the 40K level, but very, very dependent on what happens in this zone first. But even before this zone, we have to break the last high. So our conditions for continuation for this right now is break the last high at around the 30,500. We know that that was a really big battle zone. So we can't have expectations that we're 100% going to break it from here. We could 100% reject and this whole thing is over from there. So first battle zone is 30,500. Next battle zone is between 31,770 to 34,290. And then the final, if we break all of that, is 35,570 to 39, just under 40K. And we've talked about these targets on this channel since back here. Like, we've talked about this for a long time. Actually, maybe it wasn't back here, but somewhere we did. We got this long position down here at 15,700 was our entry on that. We had to exit that at the end of the March contract. So that was in this zone right here. So we exited that trade at around 28,000. Then we waited for this retracement, and now we've sniped this bottom here on this channel. So again, if you're new here, hopefully you're finding value in this so far and have not only hit that subscribe button, but are intrigued by this method and definitely wanting to know more. So now that we know everything, let's go down and have a look. I'm going to go from extreme daily time frame to 15-minute time frame, because I want to talk about yesterday's price action, because I have to be honest with you, if I was looking for a trade yesterday, which you guys know I wasn't because I was in from the W. Actually, you know what? I'm going to go to the 1 hour because now there's so much price action, it's hard to see on the 15-minute time frame. But from the 1 hour, if you guys are regulars here, you know that I was in from this W formation. This was the low of the day when we talked about it on this channel, and price held the low of the day, holding the low of the day after a 3-level drop, which we had, if you zoom out enough, it is a reversal signal. So long from there. But for those who missed out on that move and were looking for a new trade, it was really difficult price action on the 15-minute time frame because it was so volatile. So you can see that there was volatility here. We also didn't have a typical false move week beginning. We did have a false move, but it wasn't a typical one. So it was quite difficult. It was a very difficult spot to get a position. And on yesterday's video, I was talking about potential entries for those who really, really didn't have a position yet and were still looking for one. Now, we were talking about this level right here, which was the high of last week. A retest of that or a failure of that would let you know whether we're going to break out to the upside or the downside from here. It was looking like at the start of that we had an M formation here. We did not break the 50 EMA with a high amount of volume. We didn't pull away enough. I think I mentioned that on the video that I didn't like, even though we've broken the 50 EMA with vector candles, I just don't like that it hasn't moved away enough from that 50 EMA before it came back for a retracement. So it was tricky, but it does technically count because it was a break of the 50 EMA with volume. Then this retracement here was actually looking decent, and you know, the market maker really tricked us yesterday. It was looking decent because this retracement here failed this red vector right here. We had a lot of wicks. But the problem with it was that these wicks were back above the high of the week. So what I had mentioned on yesterday's video was a failure of the high of the week, expect further downside. If we can get back above it, expect upside. So this was really dancing on the line. It was kind of a nothing trade. It just wasn't giving any signals. We came down, this started to look like we were going to head down for another level, but then it held the 200 EMA. So it really was very, very tricky. And if you struggled to get an entry yesterday, I don't blame you if you didn't get it. Like, don't be down on yourself. I honestly don't know how, if I was looking for a trade, I probably would have considered that an M formation, retrace for a level 2 drop, and there should be one more to come. I would have thought that, because that's how it looks to me. But it held the 200 EMA, and then it gave us the New York reversal, which is, it's a hard one to pick, but this one, it gave us the New York reversal right off the 200 EMA. Again, because we're looking at M formation drop, retrace drop, probably wouldn't have picked it there. But the other thing too is, if we now look at it, this was the initial low of the day, and all the US did was come back to retest it. So yeah, it could have been seen so many ways. I'm just going to be honest about it, because if you're trying to learn this method and you didn't get it right, I understand why you didn't get it right in this case, and don't beat yourself up about it. Over time, we'll get better, you know? That's all we need to know, is that we learn. So we held the initial low of the day. We held the 200 EMA. It was in the time frame for a US reversal trade. By the way, if you don't have this indicator here, definitely add it to your chart. It's just called Market Session Times by Trade Travel Chill. And these colors here, so it marks out the session times for you automatically. So it doesn't matter where you are in the world, it's set to New York time, and you can trade your own time zone, and these will be set to show you the correct session times. The shaded area is the dead gap zone. The rest are marked as they are: Asia, UK, US. The turquoise little circles on the end of Asia and UK, they signify where we expect the extension. So we always get, at end of Asia and end of UK, we get an extension, whether that's to the upside or the downside. That extension is setting up for the next session. So it gives you a hint of what might happen next. And then the US one is marking the first 3 hours, because within the first 3 hours of US, if US is going to reverse the price action of what has happened during the day, then it's going to do it within the first 3 hours. So we can see here, we had a downtrend during the day yesterday from Asia all the way down. We were creating lower highs and lower lows, and then within the first 3 hours, US reversed it. So yeah, really helpful indicator for those sorts of things. We can see here we had some smaller liquidation levels that we broke. The 28,100 was my target initially, which we came up here. This was the liquidations getting filled, and it held this level, which is good. So what you want to look for when you have a super high level of liquidations, and I always mark the high levels with a dotted line, just in case you guys are watching my charts. If it's a straight line, it's not that high, but it's still significant. So with this dotted line here, we had a number of levels. What you're looking for when you get to a super high level is a strong rejection to give you a hint that that's it. And usually a strong rejection comes in the form of a stopping volume candle, which is a high volume candle with a very large wick to it and relatively small body. We didn't get that in this zone, and price kind of held. So if price held, then that's a signal to hold on to your trade, because they're not likely reversing from here. So I actually did a Twitter post once we hit the 28,100, where I just wrote readjust target. And the reason I wrote readjust target is that was my way of saying I'm not exiting this trade because I don't have the stopping volume candle yet. And so yeah, currently I'm still long, looking to see what's going on now. We've hit the next 2 liquidation levels. Won't even read the numbers because they're already done. So let's now have a look at what we have now that has just come in, because there would have been people that shorted this. There would be people shorting now. So they're bringing in new liquidity. Let's go to high block and see what we can find. All right, first things first, the delta currently is at 30 billion. That is huge, 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 huge. Lots of liquidity down below price, but look at this. See how the spikes to the outside, wait, that's not the right term. Spikes to the right, they show how high the amount of liquidations are in each level. So when you're looking at a huge liquidity pool like this is people who will be liquidated if price pulls back, right? So they're long positions currently. When the spikes are larger, closest to price than they are further away from price, this is late longs. This is people longing at level 3. They're longing too late. They're going to be the first target if the market maker decides to pull back. But in doing that, because they're so large right there, that can wipe out a lot of this delta. So don't assume that just because because we're at 30 billion, that means we're going to reverse. This is the top and it's all over. Don't assume that, because they could come, take out just these ones right here. It can be a tiny retracement, wipe out a lot of that delta, and then they just continue to the upside. When we're in a strong macro trend, that's often what happens. So if we have a look at these three numbers here, they're 28,567, 28,264, and 27,687. Then above price, the highest levels we have at this point in time. So these are shorts that will be liquidated if price continues up from here. That's 29,183 and 29,755. So now when I add all of those levels to my chart, this is what we're looking at. So one of these liquidation levels is at the 50 EMA, decent. One of them is at a retest of the high of the day, decent as well. This one will be a retest of the 200 EMA. They're all in really good spots for a pullback. But at this point in time, there's no evidence that a pullback is coming. We've got a little wick here. We've got this kind of railroad track here. But since then, price is holding the 10 EMA. If price is holding the 10 EMA, we're extremely bullish. So we've first got to drop the 10 EMA before you even think of potential pullbacks or reversals. As long as we're above it, just ride this wave. Above price, we have a liquidation level at the current initial high of the day. So that's 29,183, as I mentioned. Decent if they come for that. The next one is up here at 29,755. So we want to see if that 29,755 lines up with any vectors as well. And I've gone back as far as I can and it doesn't. It really only lines up with these two areas of resistance prior. So yeah, not a vector. We'll prefer it to be a vector, but it's not at this point. It's just a resistance level. So yeah, areas to keep an eye on for now are those. If you're looking for an entry, you're not going to get one unless we have a pullback. So see how you go. This might run out for a little bit more. And then if it does, keep an eye on those liquidation levels I mentioned. Any of those, providing this doesn't turn into a full-blown reversal, they will be areas to get in on. Now, the other thing to keep an eye on is volume. If we have a look at what's happened so far this week, we had this volume spike down here on the dead gap zone to stop the move to the downside. Then we had this spike here, which was the tricky, highly volatile US day. This was a rising volume here that took us through this level right here. Now we have a bit of a cool off. So this volume that caused this last spike just in Asia today is only a little bit, not much, but it is lower than the previous volume. So that could be a hint of a pullback coming soon. May not be, now, but keep an eye on that volume, because if that continues, if further volume spikes continue to decrease or the volume spikes start to turn red, that's your hint also of a pullback coming for potential re-entry. So yeah, at this point in time, any pullback to me is a sign to re-enter for a long position. I just don't feel all that good about shorting here because we're above all EMAs. We don't have stopping volume candles. It's just a bit of a risk. I'll start looking for shorts if we really start to look like we're topping out and it looks like the market maker wants to come to recover some of these vectors here before potentially a next move to the upside. So two ways I'm trading this. I'm swing trading this for the longer term from my W formation, holding that for a long period of time, hoping for those higher level targets that I talked about on the daily time frame. In between that, I'm day trading my three levels: in, out, up, down, short, long, that kind of deal. All right, guys, I'm going to leave it there. I don't want this video to drag on for too long, so I won't cover Ethereum on today's video. Maybe I'll do that another day. But if you enjoyed this video, please be sure to smash that like button, hit subscribe if you're not already subscribed, and be sure to check out the links in the description of this video because I've got some pretty cool sign up bonuses for you for some exchanges down below. There's an up to 60K rewards bonus right now on OKX. And in addition to that, you get 15% discount for life off your trading fees, which really does add up over time. So check that out. Check out my Traders Toolkit as well. If you're wanting to learn this method in full, you'll find all the details on our website in all of the links below. Now, let me know in the comments if you caught the long or what you're waiting to do next, and I'll see you on the next one. Have an amazing day.